Hello, good afternoon. Welcome to World Economy. My name is Blyden Rukem. On World Economy today, we'll begin a conversation looking at the world's most harvested crops. We'll start there. Nearly 2 billion metric tons of sugarcane are harvested globally each year, making it the most produced crop on Earth by a wide margin. The chart we are about to show highlights the scale of global crop production in 2024, showing how staple food and key commercial crops compare. The data is sourced from the Food and Agriculture Organization (FAO) of the United Nations. While some top crops are dietary staples, others support large industries such as biofuels, sweeteners, and packaged foods. Multiplicity of conversation indicates that sugarcane stands as a dominant crop grown globally at 1.94 billion metric tons, far surpassing all other crops. Maize follows at 1.22 billion tons, while rice and wheat are two of the world's most essential food staples come in at 820 million tons and 798 million tons respectively. Let's look at the charts indicating the world's most produced crops. The charts. At number 1, as you can see, sugarcane leading at 1.939 metric tons, or 1.939 billion metric tons, and maize at number 2, 1.218 billion metric tons. Rice at number 3, 820.22 million metric tons, and wheat at number 4. Oil palm fruits number 5, number 6 soybeans, number 7 potatoes, number 8 cassava fresh. Let's look at further numbers in this regard. Number 9 sugar beets, number 10 tomatoes, number 11 barley, number 12 bananas, number 13 onions and shallots dry, and number 14 watermelons, and number 15 apples. Brazil is notably the top producer of both sugarcane and soybeans, while Eurasian giants like China, India, and Russia are the main wheat growers worldwide. Lots of the crops in question have regional production hubs. Soybeans, for example, tend to produce in China, the US, and South American countries like Argentina, Brazil, and Paraguay. More sugarcane is harvested in Brazil each year than in the next 3 largest annual producers. Sugarcane is not only produced into the table as sugar you buy at the supermarket, but also refined into biofuel, molasses, and other sweeteners. Meanwhile, over 294 million tons of sugar beets were grown in 2024, accounting for roughly 20% of global sugar output. Sugar beets is grown specifically for sugar extraction and refined sugar. Let's also look at the corn industry, as corn, also known internationally as maize, is the runner-up for global agricultural production, with the United States as the top grower worldwide. Most corn today, especially in the US, is harvested for use in animal feed or the production of biofuel such as ethanol. The US has maintained large corn subsidies for over half a century. The Corn Belt is a geographic region of the US dominated by the corn industry and is centered around the Midwestern state of Iowa. Today, Iowa grows 3 times more corn than all of Mexico, the country where corn was first harvested in pre-Columbian times. And now to cryptocurrency, looking at the best cryptocurrency to buy with $1,000 at the moment, according to reports. It's been a dismal year for crypto markets. Bitcoin has gained 1.51% and down 25% for the year, while Ethereum are gaining 0.35% and is down 36% as of February 19th. With these two markets, bewildered struggling to find their footing. Almost no major cryptocurrencies are in the green. And there is one sector of crypto market that is booming right now: gold-backed stablecoins. The 2 leaders here are Tether Gold, are gaining 0.86%, and Pax Gold, are gaining 0.83%. Together, they account for 90% of gold-backed stablecoin market. If one is looking to put $1,000 to work in a crypto market right now, this could be the good place to start. A multiplicity of reports indicates this: Tether Gold or Pax Gold. It can be tough making the choice between Tether Gold and Pax Gold. Both are pegged 1-to-1 and to the price of physical gold, and both are up 15% for the year. Both now rank among the top 35 cryptocurrencies in the world, and both have market caps of roughly $2.5 billion. And now let's go to the crypto market and look at the price of the crypto commodities, the crypto market this morning. Starting with the price of Bitcoin, and Bitcoin stands at $67,399, gaining 449 points this morning, or this afternoon at 0.67%. Ether falling just slightly at a price level of $1,946 for one Ether. Binance $609.1 for one Binance, gaining 0.25%. Cardano also gaining. Solana, Ripple, and Polkadot all gaining. Let's look at further cryptocurrencies in the market. Further cryptocurrencies, Polkadot are gaining 0.72%, Avalanche are gaining 2.36%, Polygon also gaining 0.86%, Cosmos are gaining 1.63%. The most of cryptocurrencies are doing well, apart from Uniswap, no significant change for Uniswap. Let's look at the most reliable car brands in 2026. The data we're about to show ranks most reliable car brands in 2026 based on predicted reliability scores by Consumer Reports. Consumer Reports calculated predicted reliability scores for nearly every new car, truck, and SUV by analyzing data from its annual member reliability surveys. These surveys collect detailed, self-reported information about problems owners have experienced with their vehicles, using responses covering roughly 380,000 vehicles, allowing them to identify patterns in reliability across brands, models, and powertrains. The aggregated results are then used to score and compare vehicles, highlighting trends such as differences between gas, hybrids, a plug-in hybrid, and fully electric models. Japanese automakers lead the ranking. A Japanese brand claims 6 of the top 7 sports in 2026. Toyota leads the list with a score of 66, followed closely by Subaru and Lexus. These manufacturers are known for conservative engineering, long model cycles, and a focus on proven technology. Let's look at the chart indicating the most reliable car brands in 2026. The chart. Toyota vehicles are engineered to last well beyond 200,000 miles with proper maintenance thanks to rigorous quality control at every stage of production and simplified powertrain designs that reduce potential failure points, as you can see, leading with a score of 66, a reliability score. In addition to long-term mechanical durability, Toyota's strong anti-theft reputation places several of its models among vehicles with the lowest theft risks. Honda and Nissan also perform strongly, reinforcing Japan's dominance in long-term vehicle dependability. European brands show mixed reliability. European automakers cluster in the middle of the ranking. BMW stands out as a top European brand, ranking 5th overall and outperforming several Japanese competitors. In contrast, Volkswagen, Audi, Mercedes-Benz, and Volvo are scoring the low to mid-40s. Tesla's big jump signals EV maturation. Tesla recorded the largest improvement in the ranking compared to the previous survey, moving up 8 spots to 9th place. This gain is driven by strong reliability scores for Model 3 and Model Y, which now benefit from years of incremental design refinement. Lower-ranked brands such as Jeep, Ram, and Rivian highlight how newer platforms and performance-focused design can face early reliability hurdles. And now to the market as oil heads for strong weekly gains. The WTI crude oil fluctuated around $66 per barrel level today, hovering at a 6-month high and heading for a widely gain of 5% after President Donald Trump set a deadline for Iran to reach a nuclear agreement. Trump signaled that negotiation would likely have no more than 10 to 15 days of advance. At the same time, the U.S. has deployed its largest military buildup in the Middle East since the 2003 Iraq invasion, raising the prospect of a broader and more sustained operation than last June's overnight strike on Iran's nuclear facilities. The move has heightened the risk of supply disruption, with investors concerned that a U.S.-Iran conflict could prompt Iran to restrict traffic through the Strait of Hormuz, a critical corridor for crude exports from the region. Adding to the bullish momentum, a government data showed U.S. crude inventories fell by 9 million barrels last week, marking the steepest draw since early September. And now to the market first, the energy market, and afterwards we'll look at agricultural commodities and the metal commodities. Energy market. Energy markets and commodity markets indicate the price of crude oil at $66 per barrel. Talking about the U.S. crude price falling a negative 0.4%, Brent, which represents Nigeria's price benchmark, at $71 per barrel, falling a negative 0.42%. Natural gas also falling negative 0.62%. Gasoline falling equally. Heating oil gaining 0.56%. A gold price at $5,024 per ounce, gaining 0.54%. Let's look at further commodities. Further commodities in the market indicate the price of copper at a price gain of 0.35%, soybeans gaining a negative 0.13%, wheat price at $565 per bushel, gaining 1.03% in the market, and steel gaining 0.53%. And now we'll go on a quick break, and when we're back, it would be the Eurozone negotiation and what the prospects are talking about a wage growth as it quickens in the fourth quarter would be. We'll have a conversation after the break. Don't go anywhere. Welcome back. That's your world economy. My name is Blyden Lukem. And now looking at the state of the Eurozone as Eurozone negotiated a wage growth quickens in the fourth quarter. Negotiated wages in the Euro area rose by 2.95% year-on-year in the fourth quarter of 2025, accelerating from an upwardly revised 1.89% in the previous quarter, signaling a pickup in pay growth, but remaining well below the 5.4% peak seen in 2024. The rebound supports the ECB's view that there is no immediate need to cut interest rate further, as wage dynamics remain consistent with a gradual easing in inflation pressures. After keeping its deposit rate at 2% for the fifth consecutive meeting, ECB President Christine Lagarde emphasized close monitoring of salaries given their impact on services inflation, which remain above 3%. The ECB expects inflation to stabilize around its 2% target as wage growth moderates, though it sees the risks of slower wage easing as an upside inflation trend. At the same time, policymakers are wary of an excessive slowdown in pay, with euro area inflation having fallen to 1.7% in January and projected to stay near a slightly below 2% in the coming years. Meanwhile, a Croatia jobless rate hits 10-month high. Croatia's registered unemployment rate rose to 4.9% in January 2026 from 4.6% in the previous month, marking the highest level since March 2025. The number of unemployed persons surged by 6.4% month-on-month to a 10-month high of 87,900. At the same time, total employment declined by 0.8% to 1.7 million, while the labor force edged down by 0.5% to 1.79 million. Paid employment in legal entities fell by 0.7%, mainly due to declines in accommodation and food services activities, wholesale and retail trade, electricity, gas, steam, and air conditioning supply, and agriculture, forestry, and fishing. In contrast, employment increased in financial and insurance activities, electricity, gas, steam, and air conditioning supply, mining and quarrying, and construction. For comparison, the unemployment rate in January of the previous year was higher at 5.4%. And now to Morocco. The consumer price index in Morocco decreased by 0.8% year-on-year in January 2026, extending 0.3% fall in each of the previous 2 months. A downward pressure came from prices of food and non-alcoholic beverages, transportation, communication, and recreation and culture. Bucking the trend, alcoholic beverages and tobacco, miscellaneous goods and services, restaurants and hotel, and education recorded the largest price increases. On a monthly basis, the consumer price index rose by 0.3% in January after a 0.1% decrease in the prior month. And now let's look at the charts indicating Morocco's inflation rate. The charts. Let's look at the charts indicating Morocco's inflation rates. Looking at the charts, inflation in Morocco had been up early 2025, not too high, anywhere at 2%, went up to 2.6%, began to drop bit by bit, and within the period during the Nations Cup, inflation in Morocco has gone down to a deflation level, indicating an absolute decline in the cost of commodities in Morocco and the strength of Morocco's currency. And now to Europe, as European stock rally to near record on strong PMIs. European equities gathered pace today, with the Euro Stock 50 climbing 0.8% to around 6,100, near record high, while the Stock Europe 600 gained 0.5% to 629. Investor sentiment was buoyed by stronger than expected PMI, Purchasing Managers Index data, showing Eurozone private sector activities expanded at a faster pace since November. Manufacturing output recorded its sharpest increase since August 2025, with Germany's factory sector returning to expansion for the first time since June 2022. Markets also took comfort after ECB President Christine Lagarde told the Wall Street Journal she intends to save out her full term, pushing back against earlier reports of an early departure. On the corporate front, Moncler surged 11% after reporting a 7% rise in fourth quarter revenue, and Danone slipped 0.1% despite beating 2025 sales and cash inflow forecast, while Anglo American added 1% after cutting its final dividend and advancing major plans with tech resources. And now to Japan, looking at inflation. Inflation is lowest since 2022. Japan's annual inflation eased to 1.5% in January 2026 from 2.1% in the prior month, the lowest since March 2022. Food inflation fell to 15-month low, driven by the slowest rise in price, talking about rice prices in 18 months. And price growth also eased for transport, healthcare, household items, recreation and miscellaneous goods. Energy costs stayed negative, with electricity and gas falling for the second straight month, reflecting subsidy effects. At the same time, education costs declined further. In contrast, inflation held steady for housing, while accelerating for clothing and communication. Core inflation slipped to 2% from 2.4%, the lowest since January 2024, within the central bank's 2% target. Monthly consumer price index fell 0.2%, following a 0.1% drop in December. And now let's go to the charts indicating Japan's inflation rates. Inflation in Japan. Inflation rate in Japan has shown consistent decline from 4% early a part of 2025, a decline all through the year. It's been a little up and down, went to 2.7%, seemed like it was increasing in September at a peak level afterwards at 3% in October, but consistent decline until January 2026, when inflation is standing at 1.5%, indicating the strength of the Japanese yen, as well as cost of commodities being quite stable, not going up in Japan. As you're looking within the context of Japanese outlook, as a Japanese yen drops by 0.34%, looking at FX updates. Our top currency losers are Japanese yen, a negative 0.34%, and New Zealand dollar, a negative 0.32%, the euro, a negative 0.11%, and British pound falling, a negative 0.1%. Meanwhile, the dollar index was little changed in the market. And now to the FX market. Let's look at the price of commodities in the FX market. FX market indicates a Euro USD market at 1.17 a US dollar for 1 euro. The euro falling a negative 0.04%, not a significant change in the market. A pound against the US dollar at a price level of 1.34 US dollar to 1 pound. The pound gaining 0.13% over the US dollar, and the Australian dollar falling a negative 0.11% against the US dollar, and New Zealand dollar also falling against the US dollar, negative 0.29%. But the US dollar is gaining against the Japanese yen at 155 yen, equaling 1 US dollar, a 0.11% appreciation for the dollar. The US dollar are doing well against the Chinese yuan, 6.9 yuan, equaling 1 US dollar, a dollar gaining but not with significant change in it. Let's look at further FX markets. Beginning with the US dollar against the Swiss franc, a 0.77 Swiss franc to the US dollar, a dollar gaining 0.1%. The US dollar against the Canadian dollar at 1.36 Canadian dollar to the US dollar, a dollar gaining 0.08%. A US dollar against the Mexican peso. The peso is 17 peso to 1 US dollar. The dollar are falling 0.34% against the Mexican peso. And we're talking about a US dollar against Indian rupee, 90 rupee to the US dollar. The rupee are gaining and the US dollar falling a negative 0.12%. The US dollar against the Brazilian real, the real at 5.2 real to the US dollar. The dollar gaining 0.06% over the Brazilian real. And the US dollar against the Russian ruble. The ruble at 76 ruble to the US dollar. The dollar falling a negative 0.14%. It's that conversation. And we're talking about the US dollar against the Indian currency at 1,449 to the US dollar. The dollar gain falling but no significant change in it. Now let's look at the state of Hong Kong. Unemployment rate is highest since 2022 in Hong Kong. Hong Kong's seasonally adjusted unemployment rates edged up to 3.9% in the 3 months ending January 2026, marking the highest level since September 2022 and up from 3.8% in the previous month. The number of unemployed rose by 200 to 138,400, while total employment fell by 1,100 to 3.67 million. Youth unemployment among those aged 20 to 29 eased to 7% from 7.1% in December, reaching its lowest level since June 2025. The under-unemployment rate remained unchanged at 1.7%, while the labor force was broadly on a par with the level in the preceding 3-month period. Looking ahead, sustained economic growth in Hong Kong is expected to support the overall labor market, though some sectors may continue to face employment pressures due to challenging operating conditions. And lastly, on world economy, Turkey tourist arrival rise 3.48% in January. The number of foreign visitors to Turkey rose by 3.48% year-on-year to 2.25 million in January 2026, following a 4.99% increase in the previous month. Among the top 5 source countries, arrivals increased from Germany, a positive 6.77%, Bulgaria, a positive 3.56%, North Cyprus, a positive 9.3%, while declining from Iran, a negative 6.42%, and Russia, a negative 11.64%. By region, Europe accounted for the largest share of visitors at 38.19%, led by Germany, Bulgaria, and the UK. The Middle East contributed 10.66% of arrivals, with notable increases from Saudi Arabia, 37.71%, and Egypt, 22.35%, while Asia made up 26.34% of arrivals, with rises from China, a positive 3.52%, and Pakistan, 39.2%. North and South America together represented 1.11% of total arrivals. Istanbul remained the most visited city, receiving 1.01 million visitors, followed by Aden, 171,000, and Antalya, 67,000. Is the bulk of the outlook around what's happening around the world of economy. And here we draw the curtain to today's edition of World Economy. Thank you for being a part of it. My name is Vlad Nrukem, and thank you for watching.